the cord. It'll be here at 4:30 in the morning, but I refused to go 2 days without that. It was just me. I clumsily did that, and as I caught myself, I pulled it and broke the clip on it. So it'll all be fixed in the morning. We ordered one. It came in today, and I obviously ordered the wrong size. It's just been that type of month, right? And talking about the kind of month, we've had a nightmare month if you're a stock index trader to the downside. Now, if you're a bear, it's been wonderful. If you're a bull, it has been very painful. And it is a combination of not getting done a budget, U.S. deficit, hearing about tapering from the Fed chair, the market building in interest rate hikes that aren't really here at this point in time, fears about supply chains. It's just a confluence of all the bear data that you can imagine, and it's worked through the markets. Now, you're going to say, what's he talking about? The market is all up as can be in the evening trade. Green is up, and you can see that you're basically fine. Well, are you? Let's take a look just the way I do it and go through the charts together. First off, on a weekly chart of gold, as you're taking a look at this market, higher high, lower low, then you just keep dropping away. So you failed at the 18-week average of closes, and the market continues to fall. As we look at the daily chart, remember what I was showing you when I was standing in front of the screen? It's like a stairway. The market just keeps working itself to lower levels. As you're taking a look at the swing lines, they are in a clear bear trend, lower highs, lower lows with today's action. Now, what if we didn't have today's action in here? This is pretty much how the market was looking. You had a lower low, higher high. Then the setup has been doing this, given the bounce, and all of a sudden the big break. This is tonight. So you're in a bear trend until and unless you take out 1761. You got to take that number and hit it. Barring that, you're under the 18-day average of closes. And just a little while back, if you recall with me, the market was failing right up at these levels, and now it's just pulling right back on you. What about where the next support is? You're running at it. You keep hitting it, the lower Bollinger Band. You bounce away for a day or two, just the way you did there, just the way you're doing here, and still falling. Still very much a bear market. And here's what you have to be concerned with if you're even hoping that the market hangs on. If we get 3 days in a row where the readings are under 20, and I'm keeping this depressed because if you look on the left, you have a 20.05 reading. You don't have it. You could start embedding. You're oversold, getting a bit extreme right here, running the lower Bollinger Band. The gold-silver ratio has been hanging in the 78 to 77 level for a while. When you look at silver, it's still very much in the bear camp with lower highs, lower lows. But like gold, very oversold, not telling you to do anything. And the copper market is still bearish. It's got lower highs, lower lows. Now, Evergrande, what seems to be going on there is the Chinese government is doing its darn best to assure the marketplace and investors in China as well, and people with deposits for homes that those homes are going to get built. There will not be a default on those. As for bondholders, especially the U.S. dominated dollar bonds, we don't know what's going to happen there. They could be left to those just hold the bag. I don't know. Nobody knows. But what I can tell you is as long as you stay near this number, you don't have a sign of panic. Yes, you're in a downtrend, and yes, the trend would end if you take out this day's high, which is 431.75. Barring that, if the market wanted to work its way down, it could easily be going back to the 411.60 area, 411.50. In the platinum market, you have lower highs, lower lows. So barring the break that we had in the market today, let's come back a little bit here. The market had a pattern of a low, then made a higher high, and that gave you, with yesterday's action, higher lows, higher highs. The key was not to take out the low of September 24th, Friday. And what the market instead did is it decided to back off, and this is just what it's done. So we're back into a bearish trend until the market takes out 1,030. That's 1,000.3. And if the market wants to break down further, 902.5 could be the next zone. In the palladium market, you're still very much in a bear camp, but again, not embedded. Could we embed down the road? Well, not there. So day one, if I take you right here, is today. Day two could be tonight, but you're not embedded. You have a ways to go. So oversold in all of the metals. What's killing them is the dollar going higher. What's killing them is interest rates going higher. What's hurting them is they're not getting the inflation play because people don't know what to make out of this on the economy. As for the dollar index, in my opinion, here you go with this. So the market's trying to embed. Let's step right over here. Day one, two, nope. Both numbers were not over 80. So then we start yesterday, day one, two, and today's day three. You're fully embedded. So until the red line closes back under 80, I'm telling you that I believe that clients and customers, well, they'll be told on our side what to do in this range, but I do believe people will buy the breaks until the momentum gets a shakeout. I'm Ira Epstein. You might want to take a look at our website at www.iraepstein.com for our free offerings on the bottom right. You have a great day.